In today's video, we're going to be discussing the 4 things you need to know before you start investing in real estate. If this is your first time to the channel, first of all, welcome. My name is Preston and this is the Gotham Investing Show. We're going to be discussing all things related to real estate, investing, personal finance, and also entrepreneurship. We own a portfolio of 50 plus rental units. We do flips, we do wholesales, we also own an assisted living facility. We've been in your shoes as well, and we know how overwhelming it can feel to start investing in real estate. And that's why we created this channel, to share the successes, the mistakes that we've made, and to share with you all the things that we continue to learn every single day. If you want to achieve financial freedom, make sure to give this video a like and subscribe to our channel. We're going to be coming out with 2 to 3 videos every single week. And if you haven't already, make sure to follow us on our socials. We answer questions and post there daily. Every single topic that we're going to be discussing in today's video is vital, so make sure that you watch the entire video. The number one expectation versus reality is that real estate is passive. People typically just see the checks that come through each month, but what they don't see is all the work that led up to that. You will need to put in significant hours, especially at the beginning, to find the deal, to fund the deal, and also close the deal. After you close a deal, you're going to have to spend the next few months fixing the property up. This is assuming that you bought an undervalued property, which I recommend doing. After you fix up the property, you're going to have to put a qualified tenant in as well. I always recommend when you first buy a property to manage the property yourself so you understand the ins and outs and all the intricacies of actually managing your own property. No one's going to care more about your property than you do, and this includes property managers. The reality is that most property managers are also managing hundreds, if not thousands of other units. Now, this doesn't mean that all property managers are bad, but you need to be careful because there are a lot of bad ones out there. And when you first start to manage properties, you'll be able to identify what a good property manager looks like and what a bad property manager looks like. Even after you get to the point where you can hire out your property management, you will still need to manage the manager, so it's not completely passive. But it's still going to take a couple hours each month to manage the manager. The second expectation that a lot of people think is that you need to have your real estate license in order to invest in real estate. I get this question asked a lot, and the simple answer is no. All right, moving on to point 3. Okay, I'll elaborate a little bit further. There's no law that states that you have to have a real estate license in order to buy properties. It's not as easy as just putting in an application, paying the fee, and then you get your license. You have to take an extensive class that takes multiple hours and take a difficult exam at the end to get your license. You also have to pay thousands of dollars every single year to maintain your license as well. If you plan on buying a lot of properties, it doesn't hurt to get your license in order to make the commissions off the properties that you purchase. You can also use your commissions towards your closing costs or use those funds to purchase more properties. It also might make sense to get your real estate license if you're looking to become a full-time real estate agent or even part-time. A huge benefit that you'll get is that you'll have access to the MLS, which is going to allow you to see properties hitting the market first. As they say in real estate, the early bird gets the worm. So what do I recommend? Now the answer is that it's going to depend on your situation. I know this is a cop-out answer, not what you want to hear. For most investors, I would say it's not worth getting your license. You can spend your time finding good deals, and that's going to be a way better use of your time and a better ROI. The third expectation is that a lot of people think that you're going to get rich off your first property. There are some people out there that think a unicorn property exists that will let you magically retire after one deal. 99.9% of the time, this isn't the case, and the reality is that each property will cash flow about $200 to $500 per month. This all depends on how many units you have, and a good rule of thumb is that you want to cash flow around $200 per door. So if you have a duplex, you want to cash flow around $400 per month. And don't make the mistake that a lot of people make. This doesn't mean income minus mortgage equals your cash flow. Your true cash flow is going to be your income minus your mortgage, your taxes, insurance, vacancy, and any maintenance and repairs that you have. For a lot of people, $200 to $800 extra per month can make a significant difference. Most people typically just look at the cash flow, but you also have to consider all the other benefits that you get from owning real estate. There are tax benefits, inflation hedging, appreciation, and also principal paydown. We'll talk more in depth about these topics, so make sure that you're subscribed to see that video. The real magic of real estate starts to happen when you start to scale from 2 to 3 to 4 to 10 plus properties. You will likely have to do real estate as a side hustle until you get to the point where your real estate income replaces your day job income. In order to figure out how much income you need to make from real estate to quit your day job, is pretty simple. Keep track of your expenses through free apps like Personal Capital or Mint. We'll link those in the description. And that will determine how much income you need to make in order to hit your financial freedom number. Now, after you get to that point, you can then decide if you want to stay at your day job or if you want to go into real estate full time. Now, you have to set the expectation that this is going to be a long-term play. Think 7 to 10 years, if not a little bit longer, depending on how aggressive you want to scale. Real estate isn't a get-rich-quick scheme. If anyone tells you that, make sure you run. There is a reason why the wealthy people own real estate, and it's why we use real estate investing as our primary investment vehicle. So the fourth and the most important step is that you need a lot of money to get started in real estate. There's a big misconception that you have to have a huge stash of cash in order to buy real estate. Now, you do need some money saved up in order to start investing in real estate by yourself. If you're gonna house hack a property, which is what I recommend doing, you only need to have 3 to 5% saved up as a down payment. Now, I'm not gonna go super in depth on house hacking. My partner John is actually gonna come out with a video here within the next couple of days, so make sure that you're subscribed and look out for that video. Now, if you're gonna look to buy an investment property without actually living in it, you're gonna have to have 15 to 25% saved up as a down payment. You can't just call it good after you save up the down payment. You also need to set aside at least 6 months worth of reserves for your mortgage and also any repairs and any maintenance that might come up. The beauty of real estate investing is that you can control 100% of a property by only putting 3 to 25% down on the property. Not only that, you reap all the benefits like the appreciation, the principal pay down, the tax benefits. There aren't many asset classes that can offer this kind of leverage. Saving up for a down payment isn't the only method to start investing in real estate, but this is the most straightforward one to begin with. There are other strategies that you can use that require no or little capital. We'll talk about those strategies in another video, so make sure that you're subscribed. Now, if you don't have the money or the down payment in order to start investing in real estate, you can bring in a partner to help you. You need to be very selective about who you pick as your partner to start investing in. Typically, you want a partner that complements your skill set and vice versa. For example, my partner is really good at being organized and also analyzing the numbers. The skill set that I bring is that I'm good at talking to people and also really good with sales. There are 3 things that you need in real estate investing. That's hustle, knowledge, or money. In reality, all you need is one of those things, but let's say you just have the hustle and the knowledge. You can partner with someone that has the money while you build up your capital. If you've made it this far into the video, we know that you're serious about taking control of your financial future. If you're just starting out in real estate investing, we know that this can be a scary endeavor. Trust us, we've been there. We're going to be providing as much free value for you guys as possible through these videos. If you found this video helpful, make sure that you like the video and that you're subscribed. And if you haven't already, make sure to follow us on our socials. We answer questions there. We also post there daily. Thanks for watching, and we'll see you next time.
Oh.